Tesla shares down more than 5% today, with the stock on pace to notch a seventh straight down week. And after a big post-election run-up, shares now 43% below their December 17th closing record. The downdraft coming as CEO Elon Musk takes on a more prominent and polarizing role in Washington than originally thought, also sparking a wave of protests and incidents of vandalism at Tesla facilities here in the United States and also in Europe. For more on the company's reputational challenges, Yale School of Management executive fellow Gautam Mukunda joins us now. Gautam, great to have you back.
Melissa, great to be back.
You know, from a shareholder perspective, it's easy to say, Tesla stock is down. Elon Musk is spending all his time elsewhere. He's making polarizing comments about the far right in Europe, et cetera, et cetera. But how does that get played out in the boardroom if shareholders are going to complain? I mean, don't you need harder proof than that?
So it's not so much a harder proof problem, is that some of the threats are pretty obvious, right? The drop in popularity, Tesla sales in Western Europe are going down, and Australia are going down. Given the relations between the Trump administration and Canada, it's difficult to imagine anybody in Canada buying a Tesla sort of for the foreseeable future. But I think there are two bigger threats that are likely to be things that if I were the board, I'd be keeping my eye on. One is Tesla still makes a lot of money in China, and the Chinese government essentially has the ability to use that to put leverage on the second most powerful person in the United States. There is the odds that they will not use that leverage have to be about 0%. And so that's a real threat to a pretty significant chunk of Tesla revenues. And the second one is Tesla is the publicly held company that is most dependent on its image of its CEO as a genius. When you're doing the sort of stuff that Musk is doing and waving chainsaws around on stage, you might start to threaten that a bit.
So you think it's a foregone conclusion that they will continue to feel a pinch on China because they're going to be a bargaining chip, basically?
The Chinese government has demonstrated that it can have huge effects on the Chinese EV market whenever it wants to. If I were advising them, I would tell them, look, this is the biggest avenue to influence the American government we've ever had. We'd be crazy not to use it.
There have been CEOs in the past that have done other things, Gautam. I mean, I'm thinking of maybe Jack Dorsey, who ran two different companies at the same time, publicly traded companies. And so to say that he is spending all his time at the White House and therefore can't have control over his other companies, it may be a difficult argument to make. So what do you think the board should do or are obligated to do at this point? If perhaps, and I feel like they believe this, that he is such a genius and he is the founder of the company that no one can really replace him, even if he is spending less time there.
So it is a difficult argument to make, which is why I'm not making it. The argument is not about a split in his time. He's demonstrated an ability with SpaceX and Tesla and God knows what else to do that. It is that the activities that he is using in the U.S. government, which of course dwarfs everything else he's ever been involved with, are so profoundly antagonistic to sort of some of the things that make Tesla profitable, that is a threat that isn't manageable in the ways that a division of his time is.
Hi, Tim. I guess my question is ultimately, if you think that Tesla's management is a masterclass in bad corporate governance, why are they getting away with it? I've spent my career at least using a corporate governance scoring as a major part of how I decide who I want to invest in. Why is it that Tesla, look, at different times they are punished, but it seems as if the market doesn't really care in Tesla's case. And if that's the case, does this speak more broadly in terms of investing, period? Are there companies that will no longer be held to a corporate governance standard?
You only find out who's naked when the tide goes out, as Warren Buffett famously said. And for all of the drop in Tesla stock since Trump took office, net, if you're an investor in Tesla over any particularly long time horizon, you're going to be pretty happy right now. As long as that remains true, I think people are going to look the other way at the corporate governance. But realistically, this company is acting more like a meme stock than it is, what it is, the most important electric car manufacturer in the United States. And I suspect other companies that have that kind of adulation around their CEO are going to get a similar slack from the market, whether or not they should.
It's Karen, just a quick question. Do you think there is some amount of pain in Tesla stock that Elon will find too expensive to continue in his Doge role?
I suspect that depends on the financial leverage that he may or may not have taken on for his other activities. But Elon, in a very meaningful sense, is post-economic. If he had 1% of his current net worth, there would still be nothing on earth that he cannot buy. And the exercise of power and influence and, interest, right? I mean, running the U.S. government might just be more interesting to him than running Tesla. So I don't think economic factors are going to be the thing that constrains his activities.